Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business, Fox News, columnist for the New York Post, with the incredible, the one and only, the granddaddy of data, Bob Sloan, the founder of S3 Partners, the largest and best and most read independent data provider on the Bloomberg network. It is data that is worth its weight in gold or Bitcoin or whatever precious metal or commodity that's
we're
trading
certainly
high.
We're certainly
today.
a rare earth. For
Well,
sure,
rare
right?
earth
We're rare
material that you can find. I'm proud to be part of the S3 team, obviously, because it's high quality people and high quality work, and it shows every week as we unveil some of Bob's actionable calls, some of his insights into where the markets are going. By the way, it's not just the data that speaks when we unpack some of this stuff. It's Bob's many years, 40 years of, did I get that right? 40 years? Because if I'm going on 40, you're going on 40, dude.
Pretty close.
40 years of work experience on Wall Street. We're both old men here. So this is the whole thing. People talk about old guys. Old guys have the experience, right?
We've seen a lot.
We've seen a lot. We've seen a lot of crashes. I mean, I actually saw the 87 crash.
87. I was in Japan in 89.
Okay.
Saw the tequila crisis.
94.
94. And then on top of that, that was really the first temper tantrum.
The Mexican peso. And by the way, there was a bailout then of 94, right?
Was it a firm that was at the table for the long-term capital stuff? So yeah, sure. We've seen a lot.
By the way, multiple bailouts over the years on Wall Street. There was the tequila bailout. That was the peso crisis. I think there was a backstop that the Fed imposed, right?
100%.
Through the work of Bob Rubin. I think he helped arrange that.
Correct.
Right? Bob Rubin I think he was head. He wasn't
like
quite
the
Treasury
Economic
Secretary.
Council, right?
Yeah, he was the head of the NEC. Eventually became a great Treasury,
amazing
Treasury Secretary under Bill Clinton. Smart guy. And then there was the LTCM, long-term capital thing. That was a bailout. Right, and I think was Rubin involved in that? Well, that might have been Larry.
Well, that was a self-funded bailout.
Yeah,
right?
well,
Wall Street got together and actually went and did it.
They got together
under the under the aegis of the Fed kind of
Treasury,
moving along. Yeah, for sure.
And I think Dick Grasso might have played a role in that as head of the New York Stock Exchange. Could be wrong, but I think he did. And then obviously the granddaddy of all bailouts, not to be confused with the granddaddy of data, the 2008 financial crisis. And bailout. Really,
and then the Euro crisis too.
The Euro
2011, so on.
And then there was a crisis a couple of years ago with mid-sized banks. So it's rolling crisis after crisis. But I digress because I want to get to some of the news headlines of the day. You know, if you're a trader out there, there's one headline that you're kind of paying attention to. I think, aside from the Iran Contra temps, which is always moving the markets. This is not market moving, but it is sort of signaling stuff. It's the conviction of Andrew Left, the short seller, convicted of, I believe, 13 counts of a 16-count indictment. Check me on that, of securities fraud, allegedly stock manipulation. Now, if you know anything about Andrew Left, he's a really good short seller. I mean, he uncovered some real problematic companies over the years, and he was very vulnerable, meaning he was on air a lot. He was on CNBC. He was on Twitter. He was talking about his calls. He published research, Citron Research, I think it's called.
Yes.
He was out there. The feds charged him with manipulating. Now, before I go there, what do you think he was charged with?
So, that's a great question.
Because most people think he's charged with being a short seller. That's not true.
Well, first of all, there's a great difference between running a public campaign and being short and then not running a public campaign and being short. One, the former is activist short selling. The latter is doing what an average professional investor would do, which is hedge his bets or take outright negative bets on something.
Right.
So I think the problem was that, and there was a news service that wrote a story about this, and they said, this is problematic for short selling. I said, well, wait a minute. It's problematic if you run a public campaign and you're actively talking about a stock and you're actively talking your book. And, all these things come down to what was the intent?
Yes.
And that is Chitterella That is the granddaddy
of insider trading,
insider
case law.
trading, but also market manipulation. It kind of starts with that case, particularly because it involves short selling.
Right.
So, to me, it's a tough one. It's a very tough one, but I come out on the side of, if you know that you have influence in public space, which he did,
Right.
and then you come out, even though you're right, you know what your public statement's going to do. There's probably common sense says you don't cover within like 5 minutes or 5 seconds.
Yeah.
Because you're creating the news.
Okay.
Right? So you're creating the news and it covers. Right now, is that illegal? Well, the jury said yes. So that type of thing is new precedent.
Okay. So I don't invest in individual stocks, just so you know.
Yeah.
For this reason. I won't buy Bitcoin for this reason. I don't even own an ETF.
Does that make sense to you?
Yeah.
Because I know you're on the other side of this, right?
Because
you think that the case is, really shaky.
I don't know. I mean, I just want to unpack it a little bit. Okay. So I don't buy that because I'm a journalist and I don't want anybody ever to say you move the stock based on your reporting, even if there's nothing to do with it. Right. So I'm in mutual funds and I invested in the S&P 500 fund and I do quite well, municipal bonds, whatever.
Right.
And I write about, you can't really move New York City municipal bonds. You know what I'm saying? It's not tough. Me to move, that's based on fiscal situation of New York City. And I'm not in New York City municipal bonds right now because I'm no longer a New York resident. But in any event, I read the indictment twice. If you go through all the stocks, now there were about 16 calls he made and they convicted him on, I think, 13 of the 16. If you went through them, though, you will see that what his crime was not doing anything contrary to what he was saying. Like he would say, Tesla is a strong buy, right?
Yep.
I think you should buy this. This is a great company, way undervalued. And he would go long, right? He would publish his tweet, do something on CNBC or whatever, publicize it. He knew he would move the market because he has a following, because he's good at his job. And he would then, when that market moved following his tweet, even if he said, I'm in this for the long haul, he would cover some of it or cover most of it. Even if it was below or above, depending on, the short or the long position, the price target, he would lock in the gain. And so he would have published price targets. So, and if you go through his calls, what I found interesting is the vast majority of them were long-term right. Like the stuff he said was going down, went down, the stuff there was a few that he didn't miss.
So let me ask you a question. The way I read it was that, if you worked at an investment bank and a regulated investment advisor, which I would imagine he was, I don't know, maybe not, because he might have been managing less than $100 million. Okay. So we don't know that. I don't know that. But
I mean, he was making a lot of money.
Yeah, fair. But so what? You can make a lot of money and not manage. Hold on.
No, I just want to say he did. This was another thing they mentioned. The fact you said investment advisor. The Fed said he kept saying he has clients to suggest that he was managing third-party money.
But if it's less than 99 clients or fewer than 99 clients.
But they said it was none or almost none.
So he fudged that.
He fudged that, if you believe them.
Right.
If you believe him, he would say his clients were the hedge funds that bought the research.
Yep. But what's the difference? So the way I read and I have not read the indictment like you did, and I didn't read the decision, but just the news stories.
Right.
What the case is basically saying is, if you have social media influence, there should be a restricted list. And, if you're a Wall Street firm, you publish research, guess what? You have really strict parameters on what you can do. Really strict. A lot of times it's like you can't trade it. Like if we're covering the stock, we want to do things, there's a lot of parameters around it. So what they're saying is, hey, if you can,
Wall
do
Street
that.
Firms don't. on their trading desk don't trade the stock.
Well, like for example, if
cover,
you're
like,
under
Amazon.
if you're underwrite if they know that they're underwriting something,
Right.
and they know they're doing some kind of issuance, there's a restricted list.
Right.
Like you have to hold for certain periods of
Right.
time, et cetera. And so, in other words, they're news sensitive, they're research sensitive. They understand
Right.
they have the power to move the market, and there has to be a certain time frame that's met to either, to hold the position, whatever, long or short. So the feds are basically saying, look, the same rules apply to you. That's the way I read the case. And is that wrong? No.
I don't know though if the law is quite like Citarella was a famous, just so you know, I think Citarella was a printer.
Citarella was a printer, yes.
Right, who took he was printing, I believe it was Business Week back in the day in the 70s, who saw the early versions of
he would see the annual reports,
Yeah.
and he would see all these things before they actually
or
went out.
or it was or annual reports or something. He was a printer that saw this stuff and would trade off it. Do the research on it, but that's what I believe it is. So it was a classic insider trading case where actually it helped create one of the foundations of the misappropriation theory. It wasn't classic insider trading because he wasn't a typical insider. He didn't work for the company. He worked for like a third party who had access to the confidential information. It helped what established is this third party trading on information, stealing information that belongs to shareholders. That's called the misappropriation theory that extends to non-company employees, like CEOs trading, when they know the company's going out of business, selling all their stocks. Stuff that got Ken Lay in trouble. Remember, although it might have got overturned, but I remember there was a case against Ken Lay, the former Enron CEO, where he sold early his Enron stock before the investigations hit. That's classic insider trading. This is Citarella was a little bit different, but they really didn't. There's no insider trading here for
no. This is totally about influence. Your influence on the tape. And they said market moving news.
And they said he was somewhat misleading. I would say somewhat because everybody knows he was short. He was somewhat misleading in covering his positions. Like he went out there with the intent to move the stock in the short term.
Yeah.
And capitalized on his market moving tweets. Now the question is that really illegal? He didn't lie. I guess you could say he lied. The only thing he say he lied is that if he sold before or after
I'd ask you a different question. If
the price target,
yeah, but so if he's not regulated, right? What they're saying is other people can't do that. Like you're an investment bank, you're a hedge fund that is operating at a certain level. You cannot do that. Can't. That's a no-no. But you're saying, okay, if he's unregulated and he's been consistent with his positions and pre-published them and then publishes more or initiates new and then covers his position, he knows he's going to move the stock. And so they're saying is that's manipulation, right? He needed to have some seasoning period. He shouldn't have done it right away. Now, the more interesting question to me is 2 weeks later, he covers. Is it the same case? Not sure.
I don't know. The
timing of it is what got him in hot water.
I think this is ripe for appeal because the manipulation, because a lot of these stocks, it's hard to think that Andrew Left was manipulating Tesla. It was such a widely traded stock and stuff,
I don't know, maybe.
Some of them were smaller caps, and so he can move it. But he was right. And, here's the thing that galls me. When you look at social media, all these meme stocks, these guys and gals, they jump on these stocks. They promote it. The squeeze is coming to the moon. They get people in there. And let's face it, the squeeze never comes. All the pumping of AMC. It happened once and it never happened again.
Well,
it happened back in 2020.
I think the squeeze in the names that they're talking about, it comes rarely, okay?
Right.
They're wrong like 8 out of 10 times. If they looked at our data, we could tell you that.
Yeah, but their conviction is just like, oh, it's coming.
No, I understand. But the fact of the matter is that squeezes happen a lot, actually. Happen more than than they have in a long time.
But the meme stock squeezes have not been happening. There's so much. By the way, you can't squeeze AMC anymore. They've diluted the shit out of these guys.
Well, you'd have to borrow
very hard.
You'd have to borrow so much of it, but so many shares. But as a notional amount, right? As the total value, you could.
It's possible, but
no one's going to take.
But do they really believe a squeeze is coming, or are they trying to get people to buy it so they can exit?
I think the more interesting point is how much of his research did he farm out to other people, right? And so when people, it will have a chilling effect, and it will affect market liquidity. One of the more interesting things that happened in the last couple of months is that if you look at what's going on in the UK with the FSA, they have disclosure laws in the UK that says anybody that has a short that's over a certain threshold, let's say 20 basis points of the actual total outstanding of the stock, you have to disclose. And we actually have something on our app where you can see all the disclosures in real time. So what happened though is that no one liked that rule. Right, the short sellers didn't like it because it hurts their anonymity. But guess who actually lobbied the FSA to have it to where there's no public disclosure, just private disclosure?
Who?
Most of the mutual funds in the world. Because they realized that it hurt liquidity.
Oh, interesting.
And so it was actually the long only folks that went over and said, this isn't really working for us. Now, we don't short, but we're telling you when we're trying to get out of positions, they have to be there. It's part of market support. It's part of the market infrastructure, part of the market structure is very important. So the question is, does this decision hurt liquidity?
Because you're stifling speech in this sense.
You're putting doubt into people. The question is, how much did he farm out? How much piggybacking was done by the firms? I have no idea.
Yeah.
And we don't know.
I don't know how he does his research. That's a good question.
Did he sell his research? Was that part of it?
Yes,
he did.
He sold it to hedge funds.
Did it say into them?
We
should revisit that.
Yeah, I think I want to say there was like mentioned in the indictment. So who knows? It sounded like 3 or 4 different ones.
So,
and it would be hedge fund A, hedge fund B. They weren't charged in this case.
I understand. So because they didn't piggyback off what he was doing, right?
They had to have if they were buying his research. They were just buying it and doing what they did.
Were they buying it and executing their own trades, or were they part of or is he pooling capital and doing it for them? So that was not the case.
He was not trading for them. No,
that's right. So what you read into that is either there's follow on because they did the same thing. Probably they did not. Probably. Don't know. But probably. It's what my intuition says. So, I think, activist short selling and research, they have a very loud voice because it makes great copy.
Right.
And great news headlines.
And journalists follow it.
Journalists follow them, and it's breaking
Although,
news.
to be honest with you, just so you know, I rarely use what they tell me.
Okay, so why?
Because I'm just a little like when I'm getting leaks from a guy. I recently someone that represented a short hedge fund said, "Oh, I got this great story. I don't want to say about X and Y," and I said, "But you can't say where you're getting it from. You can't say." I said, "No. If I'm going to write the story, if you're going to provide me with the research, I got to say
it's from you.
It's from you. It's just not kosher, and because it could move the stock."
Well, that's how.
And then they said, "No, we can't deal with it." I said, "Well, take it somewhere else," and they did.
So people wonder how Charlie and I first interacted with one another. You had called me during the meme stock and said, "Hey, you guys are marketing these short squeezes," and I said, "No, Charlie." I said, first of all, I was on Bloomberg last week, and to your credit, you were like, "Okay, that makes sense to me." So you're eating your own cooking when you're telling that story, because I personally have experienced that.
Right.
You listened, you said, "Okay." Someone put that in my ear. I called you about it. You gave me the explanation, and then we started talking. And then actually, you were like, "Well, this is kind of interesting."
Right. No, I remember that.
So, I I think a lot of these things, like the Icon short, right? No, yes, he had a margin call. Yes, he was borrowing a lot of money against the stock. We did an analysis of that trade. Okay, now it's Carl Icahn, one of the great investors of all time,
Right, sure.
huge name in the marketplace. You have this activist, we won't mention his name, that says, this is a short, it's unbelievable, it's Carl Icahn. Do you know how much money changed hands in that trade? You know what the P&L was?
No idea. I was skeptical of the whole trade, but that's another story.
I'm going to say it was less than $50 million.
Really?
So 50 million is bupkis.
Well, for especially around Carl Icahn.
So there was
He's worth
all
50 billion.
this noise and craze
Yeah.
and headlines and articles and follow on the guy's in trouble. The trade was worth, and by the way, that's the entire trade. So, you know, that activist was not capturing that entire trade because other people were just probably short because. So a lot of these things are like that.
Yeah, no, I agree.
They're not like calling a top on a $100 billion stock. Now, you can say SaaS apocalypse. There was a report. You know, a lot of it's what we call bear porn, right? A lot of it is on X, and you know that really started with a report by I forgot the guy's name, but that did have an effect. Now the question is, you know, because that really
Right.
created Salesforce and it created Workday and all
No,
these
no, I
other,
remember that,
you know, it started this whole thing about AI is going to eat software as lunch. So the question is, how much, what happened there, right? So it's all about intent. Very hard.
I do, and this is why I don't think it should be a criminal case. Okay, I first off, I think Left's voice is kind of a necessary voice. If he was totally wrong on these things, I would be like, you know, or trading against his calls, I would be like, that's a crook. But he wasn't, and he does his research seems to be okay.
I agree with you.
And
So
you know, Bob, why did this have to be a criminal case? I mean, it reminds me of what happened with Michael Milken back in the day. Like Rudy Giuliani put a lot of time and effort into nailing Michael Milken on what turned out to be relatively minor violations. If you don't believe me, I know this is you know, Michael Milken that allegedly was the junk bond king, and you know the guy. Not he was, but he went to jail for, you know, in one of the most high profile cases. But if you look at the case itself and dissect it, it was pretty weak tea. What he essentially pled to, what they put him in jail for like a year and a half. So my when I look at that, I said, well, this is ripe not for a criminal prosecution, but if you don't like the way Milken is acting, it's a civil case.
So, right. So
and you cut a deal, and you basically establish some sort of rules of the road. The same thing with Left. If you really don't like the fact that he's trading, he's not lying, but he's moving the market and trading it. And most, by the way, whenever he puts out a call, do you think when Andrew Left goes short, do you think he's not short? Says this, I mean, you kind of
no.
Right?
But that's not the. I don't think that was the issue, right?
No, the issue was
it wasn't like an undisclosed. So in other words,
well, that's why this gets really great, Bob, because
it was disclosed.
It was disclosed.
You knew he was short.
He knew he was short. They say he had the intent of moving the market. When he moved it, he exploited that movement, and his misleading was that he would cover before he wouldn't cover at the price target, you know, whether it was a long, like he would sell before it hit 20 and pocket the difference. He would short before it fell to 20 and pocket the difference, you know, if that was his price target. And that to me seems like pretty weak tea, and it should be a civil case. It should not be, because that's where you say, here's the civil rules.
Yeah, but that's the
rules
message.
of the road.
The message is don't
do this anymore.
Don't do this
But
anymore.
you put someone in jail for this. It's like, it's chilling and it's stupid because
there was a little bit of like, well, wait a minute. Not all short selling is bad. There was I was following this on X.
Yeah, well, the U.S. attorney brought the case, and this wasn't about short selling, but it's even worse because he's criminalizing something that probably did not have criminal.
So you and I differ. I think if you you should, if you know you're going to come to the market with market moving news, and that's what you're doing, and you do it, and then you cover immediately. I could see why there was a case.
You should. I think it's a civil case.
Okay, well, we'll agree on that.
Yeah. Okay. Let's drop that, and we'll probably. This is
I don't know.
not-
I could go back and forth on this all day long.
I know we could. But we have other news, and we have your stuff, which is what helps pay the bills around here.
What do you hear?
Well,
60 minutes.
Just so you know, I just wrote a pretty lengthy piece that kind of did a TikTok on. Was a TikTok. It's in the New York Post about what went down. You know, here's the thing: David Ellison, Larry Ellison's son, the Oracle co-founder's son. Everybody looks at him as some sort of rich kid, silver spoon. He's not. He's a pretty tough customer. He's, if you go through his life story, he didn't really have a relationship with the old man until later.
Yeah,
all this, and he's pretty tough. And over the last 2 years, he's battle hardened.
Mm-hmm.
Went to war with the Redstones to get Paramount, and finally got it.
Yep.
Before that, he was an independent movie producer and did some really good work. Top Gun Maverick, I think Mission Impossible. Then he went to war with the established powers that be inside Hollywood to win Warner Brothers.
Yep.
That was not easy. David Zaslav wanted to sell to Netflix. Netflix is one of the...
No, they're the kings.
The two gazillion-pound gorillas.
Absolutely.
And he won. He hostiled him. This guy's a pretty tough guy. He's not going to let Scott Pelley, who's at 60 Minutes, deter his vision for that thing and for CBS News. And he hired Barry Weiss to bring the stuff to the center.
Mm-hmm.
And meaning the alleged left-wing slant of it. I should point out that I know Scott Pelley a little bit. I personally like him. He's a very formidable guy, by the way. He's no joke. This guy, he's a smart guy. He believes in what he believes in. He thinks that they're ruining CBS. I would say they're bringing a different approach. That's me. But he's not going to be deterred from doing that. And Barry Weiss, when she runs big decisions by them, she goes, she asks him, goes, how much pain you willing to take? Because doing what they're doing obviously is creating this firestorm of publicity.
You're ringing the bells in the temple, right?
For the left-wing media, what's left of them, and they still have big voices. But he basically tells her maximum. He doesn't give a fuck. He doesn't read Puck or whatever that covers this stuff, every 5 minutes,
I'll relay that.
No, he does read it, but he doesn't give a shit, really.
Yeah, right.
I mean, his PR people give a shit. Trust me. They go nuts when they see those stories. But which Dylan Byers does a good job. And, so my point is,
and we like John Kelly.
Yeah, John Kelly's a nice guy. But and our good friend
Bill Cohen.
Right. Yes. So, nothing against him. I'm just telling you, he doesn't give a fuck.
Care. Right.
And he doesn't care what the New York Times says. And it's, full steam ahead. So, if, Kelly, Scott Pelley to him is like, all right, Barry Weiss, Scott Pelley, I'm picking Barry Weiss. You got to go.
So who do you have any idea who follows Scott Pelley out the door? And what does Nick Bilton do now? Because your first 2 days on the job, you have all these stalwarts walking out the door.
I don't know Nick Bilton. I mean, he probably doesn't know me. I can tell you that people that know him said he was a decent tech journalist, I think one of the problems that Barry Weiss has, and I like Barry Weiss, she's a really smart person. Remember, she created the Free Press. I think it's a great product. From scratch. And Ellison bought it. It's part of the whole sort of ecosystem that they have growing there, which will soon, after regulatory review, if it gets through, which it probably will, include Warner Bros. Discovery. He and Barry don't really have the don't really have the experience, I should say, not the chops, but the experience to run TV news. Now, here's the thing. I've been in TV news now off and on for like 20 years. And when did I get to CNBC? 2006, 2005, 2006. So I'm right there, right? It's 20 years. I could never run a network. I couldn't run a show. I mean, it takes a level of, I'm a reporter, right? I go before camera, I talk, Sometimes I read off the screen. A lot of times I break news. I mean, people who do TV can't tell me how to break news. Right. I can't tell them how to like keep this TV thing going, particularly something like CNN, which if this deal goes through, Barry Weiss will be running as well. It's because it's 24/7 news, right? You have to be in the control room. You're like, oh, get a better shot there. Do this, do that. We need a reporter there. When you look at packages, you got to edit it. Like I can edit words. They edit visually. We need a better thing there. We need that tighter. The best ones will tell you that. And I've seen the best ones, like Roger Ailes, right? I mean, Roger Ailes understood visually, like we need a wide shot. We need to see, there was a rash of Wall Street guys killing themselves after Madoff.
Can I ask you a question?
And he would say, make sure you get you show buildings straight up so we can see it. And that takes a skill, Bob. I think they need an operations person over there.
Well,
and I think they know that too.
Why did, so I don't know if this is true or not, because I saw I don't know if it was Netflix or whatever show where they had Roger Ailes.
Oh yeah.
Did he really watch people without the sound? Do you know that?
What do you mean watch him without the
sound? So he would look at the audition tapes.
Oh yeah.
Why did he do that?
Because he was, well, I think that's true. Okay. I want to say I think. And because he was such a brilliant guy visually.
Yeah.
I mean, Roger, like you can't replace like somebody that has done this, produced. I'm talking about produce. Seen talent, watched them.
Yeah.
Knows what sells.
And knows what's good for them and how to coach them and how to put them in the right situations.
He was brilliant with that. Just so you know, with me, he said, I'm not changing you. I don't want you to be a button down anchor. I want you to be the street fighting reporter.
Right.
And I
which, by the way, I think you lived up to that this week.
I think so. Yes. Well, based on my Twitter feed, but Bob, it was good advice.
Yeah.
Because he saw what he saw in me.
Right.
And I wasn't going to do the nightly news.
Right.
But I was going to be part of something different because news is changing.
And that rang true to you.
Absolutely.
Yeah.
And I never doubted his sincerity in that. So that's what Roger was good at. And, there's a guy named Jonathan Wald. I used to work for him at CNBC.
Yeah.
He's a great producer.
Mm.
I mean, she needs someone like him.
Yeah.
How do you get somebody in there that can make the trains run on time, that understands the visual medium, that understands packages, understands how to do a daily broadcast, how to deal with and then and frees her up essentially, because she's a very formidable, nice lady and smart to deal with talent. Here, I'd like you to look at it this way and look at it that way. That's what frees it up. And, it's all about, rarely do you have a guy like Roger Ailes who knew how to write. He could do some reporting. He was a good writer.
Yeah.
By the way, he used to write screenplays. I mean, that's how smart he was. He understood the medium that has all that together. Most journalists, do one or the other. You know what I'm saying?
Yeah, sure.
And being a producer, like Chris Licht, who got, I believe, a bad rap when he ran CNN.
Yeah.
Understands a lot of that.
Yeah.
He had some issues because he just ran into a political firestorm that she's running into. Same sort of stuff, with people out to sabotage you, don't like what you bring into the table, So I'm just saying that there is this technocratic thing that good producers understand, and the best ones now understand how to merge the linear with digital.
Yeah.
And you know who knows how to do that? Our friend Max Myers at CNBC.
One of the best.
He understands that. And that's kind of what they need over there. Someone like Wald, Max Myers, you name it, Licht. I mean, I think Licht is just sick of TV journalism after his bad experience at CNN. But you need a guy that gets in the guts.
And knows, as you said, sits on the floor, is in the booth, understands the shots, understands the copy.
Yeah.
Understands how to coordinate.
Understands the business a little bit, which you need.
Because it doesn't pay for itself.
No, it doesn't pay for itself. So I think she, I think she's good. That'll be their next step. Get a real operations person over there to try to help run the thing, because it's, you can't just keep having these. Listen, at some point, you would just like to be out of the news a little bit and just run the thing.
I was going to say, it's if you're looking to send a message, they sent one.
Oh yeah, I don't think anybody else is going to leave
Right.
like immediately.
Okay, interesting.
I don't think so. I mean, they're not looking to get rid of them, and if they want a job, and
Well, send a message.
I mean, we all get paid. In this business, that's sort of changing. We get paid probably more than we should. Hate to say it like that.
I don't know.
I'm like,
I think you're underpaid.
I do too. All right, one more story.
One more story,
and then we're going to you.
Right.
Jamie Dimon says he has $20 billion to splurge on
What's he going to do?
Okay, so I ran that by a top private equity guy, and he says, you know what he'd really want? Carlyle's private credit business. Now, if you know anything about Jamie, he's been pissing all over private credit like crazy. Oh, it's
cockroaches, right? Rather cockroaches all over the place.
Yeah, but he likes the business.
That's a scoop.
Now, just so you know, Carlisle, when I ran that by them, went nuts. No, we're not for sale. Don't say it. Don't say it. And I said, okay, I won't report it if JP Morgan denies it.
Yeah. Which
they didn't deny when I sent them like my notes on this. Now, that doesn't mean it's going to happen. Probably won't happen. By the way, 20 billion. So private credit at Carlisle, which is a really good business. By the way, they don't have.
Oh, I'm sure it is.
They don't have the cockroaches there, right? It's like a $200 billion business. It's like half their AUM. It would go for, I don't know, about $16 billion. So it's right in his wheelhouse, so to speak.
Something like 10% of the assets.
All right. So that's one thing. The other thing is maybe a wealth management firm, maybe an infrastructure firm. Remember, Larry Fink bought an infrastructure thing. What's it called? GIP or something. And it's done very well for them. So I could see those are the three things I hear. Those are my scoops for the week, Bob. Let's get to your stuff.
Our winning streak has ended, sadly.
Boo.
But that's what makes this show is that we
fess up.
We fess up. We said that we had a bullish call on Gap, and that was wrong. That wrong in a pretty big way. It was down 15%. But this week, we have a bearish call on Guidewire Software. It's a cloud-based software platform. It does policy, claims, and billing systems for property and casualty insurance insurers worldwide. Market cap's, $13 billion. Reports Thursday afternoon. If you look at the short interest on the screen, you can see that it's gone up pretty much to where it's at a multi-year high, and the price has bounced, but it's on its way down. So we think this is setting up for a bearish print on Thursday.
Interesting.
If we go to battleground stocks, one of the things we've been looking at, one of the things I think that makes S3 is that we are really a positioning company, meaning we've created a seventh category for market data. So when you turn on your laptop, or you go to Yahoo Finance, or you go to Bloomberg, wherever you're getting your financial information, what do you get? You get market pricing, you get earnings, you get maybe ETF flows. 6 categories of financial data. We've actually invented the 7th.
Yeah. Okay.
Which is positioning.
Interesting.
And we understand that in the market structure today, where indexers own so much of every stock, it is not like trading and investing 20 years ago. You really have to understand who's fighting whom on an everyday basis. So we invented and coined this word, and I think I was on Bloomberg News, and they actually were nice enough to say you all at S3 coined this phrase, battleground stocks.
You did,
which we did. And if you start to look at these stocks, so let's take a look at the list. Pull it up on the screen so everybody can see it. Thank you very much. So we got a pretty interesting if you look at some of the long short ratio, the one with the lowest, meaning it's skewed satellite to phone broadband network AST, right? And you have data center.
We have a little bit of background noise.
Yeah, we got some.
We lost Bob's feed a little bit, guys. Just 1 2 1 2.
How about now? Okay.
All right,
It's
guys.
okay.
Sorry, a little
Little
technical
technical difficulties. We handled that like a pro. We didn't get flustered.
Good thing it wasn't me.
No, believe me. But I think the point here, if you look at some of these stocks, satellite to phone broadband network AST, we're going to talk a little bit about that in detail. Why? Because they use SpaceX to launch their satellites, but they compete with Starlink.
Ah, interesting.
So this is being shorted quite a lot. And you have active longs at 3.76 billion. You've got shorts at 5.79 billion. The short ratios at 0.65. That's pretty low, right? That really means that you got really bearish sentiment. But look at some of the stocks here: data center, AI servers, electric trucks and SUVs, cloud-based design software, AI-driven. So you're seeing a lot of these stocks that are in the battleground where there's a duality to the stock. Some people say AI is going to benefit. Some people say it's going to eliminate it.
We had this conversation, you and I, about the staying power of AI and whether the retail is going to be bag holding.
Well,
is that play into this? Now? Here's the theory. The theory is they're going to do 3 big AI IPOs.
Yep.
All the exchanges have relaxed their rules to let them in the indices. S&P, Russell, NASDAQ. That means if you're a passive investor, you're likely to be holding this stuff if you're in one of those indices on the S&P 500 fund.
Yeah.
The question is, as the insiders cash out, right? That's what always happens. You stay, the thing, OpenAI stays in the index. Stuff starts to normalize in AI. Andy Kessler of the Journal wrote about how there'll be price compression, and that should impact the stock's bottom lines. Now you could see a little bit of a I don't want to say collapse, but you could see like a huge correction in this stuff, and then retail holds the bag in the index funds.
So I think the point is, how do you make some of these stocks that are so big available to the public earlier, right? So the private markets have been very active, and then
so they
adjust all the indices.
Yeah,
right. The private markets have been very active. So if you're an accredited investor, meaning you have a net worth over, I don't know if it's $5 million or whatever it is, some level, but it's fairly high, very high for the average investor. You're shut out.
Yeah.
And then the only way you can get into it now is basically
after the fact.
So
when we say after the fact, we mean after the IPO.
After the IPO, because then it's available in your whatever index fund you want to go buy. So I guess it's the only way you could get $1.5 trillion market cap company to raise $75 billion
right
in a new issue IPO, which is the largest IPO by a matter of, I don't know how many multiples, but
what's the average IPO?
It's a great question. Don't know.
This is like so much bigger.
So much bigger. I mean, usually people raise a couple $100 million,
right.
and they make $700 million. But it's like that's big, for an initial public offering. This is on an order of magnitude bigger. So that's a potential. I'll call it pothole.
Yeah.
For public opinion, regulators.
Hat tip to Larry McDonald at the Bear Traps Report, who turned me onto this, because it was actually a smart piece of analysis by him.
So let's take a look at UiPath. We can pull that up. So you look at UiPath. This is a $6.2 billion software company, automates repetitive business tasks like data entry and document processing. The bulls say AI makes the tools more valuable. Bears say AI replaces them. This is a classic battleground.
Oh, there you go.
And so when you go to the next slide, next chart, because you can see in the blue the short inches up, what's happened? You've got passive shares increasing. You have short interest up.
Right.
And then you have long active, more or less flat. So you can see like passive up, short interest increases, quite a bit, like 50 to 100 million shares. This is what creates battleground. And, we're the only data company in the world that can actually show you that this is what's happening today and break it down by cohort and break it down by style. So we could even get into like which hedge funds are long the stock, but we'll do that next time.
Okay.
So if we go to the next piece, let's skip the Bloomberg thing, and let's go to Intuitive Machines. This is another really fascinating company.
Well, that's battleground all over.
Right? It's got battleground all over, right? So you got they build lunar landers and space infrastructure for NASA and the Space Force. Interesting, right? So you have active long shares are up 18%, passive longs up 67% in the amount that they've actually invested. And the shorts peaked in early April, and they've covered about 5 million shares, right? But rising stock prices have doubled the notional exposure to $950 million. So you got shorts have stuck in, riding as the price goes up. You can see in green, and the price has gone spiked. And then passive long shares up, active long shares up, shorts staying in. So this is a perfect example of AI being, is it good or bad? And it's setting up for a very, very, very volatile situation.
So AI is the battleground.
It is. It is.
The ultimate battleground, right?
Because people saying, is it good or bad? So, you have all these people saying.
And not good and bad investments, not whether it's good and bad societal.
Well, both, right? So you have, Bezos says all these guys are out there selling this fear that everything's going to be replaced. I just went to a great fintech conference yesterday, and they had some really fantastic speakers. And, one of them is a many $billion private valuation company. Just looked at everybody in the audience and said, look, if you're not reducing your force by 20%, if you're not cutting your expenses by 20%, so however you do that, that's up to you. Most of that's headcount. For the next 3 years, you will be obliterated.
Open to what?
You will be obliterated.
Obliterated. Yikes.
Because you're going to see firms that are 3 people doing the same thing you are that have an amazing cost advantage because of AI. So that's over here, right? Then you have Jeff Bezos over here saying, you guys have got it all wrong. That's not what's going to happen. What's going to happen is that jobs are going to be created because there's a need to how to implement. There's a need for how to deliver. There's going to be need for services, all these things. So you guys have it all wrong. So a stock like this, like Lunar, right, which is Intuitive Machines, LUNR, is a perfect encapsulation of that debate. That's why we highlighted it today, and it shows you that the long community is like, look, we believe in the tools. We don't think of AI as a replacement. And then you have short saying, no, this thing goes away.
Huge societal impacts here, Bob. Even if it follows the Bezos sort of trajectory, which isn't doom and gloom, why do we need immigration? I mean, I was just the first thing I was thinking of, like, okay, if you only need 3 people as opposed to 200, why do we need any immigration?
It depends on what. Well, it depends.
Unless it's a scientist from wherever.
So, will you use an agent to book travel? Maybe, right?
I haven't in a while.
No, but I mean like a real agent, like an AI bot, basically.
I would.
Okay. Would you use it to shop your groceries?
Yeah.
Would you use it? So there's things that are low value, but probably can be done.
Well, that's what I'm saying. What do you think immigrants? What jobs?
Low
immigrants
value
do?
that probably could be done. Meaning low value, meaning, you're not going to pay that much for it.
And so when you get those sort of low end white collar jobs automated through AI, there will be, I mean, naturally, there should be a movement towards the blue collar stuff that you're not going to unclog a toilet with AI. So trust me, you need plumbers, right? You need,
But you also
bricklayers.
need people for service. So I happen to think,
less of
in financial services, you will use AI to help you make decisions. You use AI to make analysis. But then
Right.
at the end of the day, the execution, right? The actual doing of things, people are going to still want to talk to somebody.
Oh, absolutely. But I don't think it'll take.
It depends on which layer, you know.
I mean, but that sort of lower layer of entry level that working class people, my family did. Although my family were construction workers, and I still don't think there's always going to be need for iron workers. AI bots cannot do that.
Well, robots maybe can.
Hard,
right?
Harder.
But you see all these things on X, and you say, well, maybe,
but it's off. It's way off. There's going to be. I mean, I maybe at some day, but my point is that society, we're going to have to like grapple with some real, like Trump has made immigration an issue for a lot of reasons, but I think he's right on the economics, because AI and automation means we just need less people.
But it also means, so when Thomas Edison invented electricity, what happened? People tried to put electricity into factories that were powered by steam, coal.
Right.
You know what happened? It was a total disaster.
At first.
So they realized they needed to build a whole new factory, right? And so the same thing's going to happen with AI. You cannot do like if you want to go find a Halloween costume on Amazon, okay? By the way, it's a hard thing to do.
I haven't done.
It's a hard thing to do.
I've never done it.
No, it's a hard thing to do.
The fact that that scares me about you.
I read a lot.
Yes.
So if you that's a hard thing to do. Okay, but to use AI in a business like ours, where you need to be on 24/7, 365. Okay, I don't care if you have a production ready element, call it element, meaning analytic or product. If you can do it in 10 minutes, if it's going to have one hallucination, that is one hallucination too many. Right? We have to be up 24/7, 365. So it will take a while.
Yeah, no, I got it.
For these things to be adopted. And what are you going to do? You're going to take the lowest order of thing and try to automate it, and then you'll see how it goes.
There will be a disruption. I just think that society has to grapple with the fact that these.
Well, what do you think of Bernie Sanders' idea? Let's just give 50% of all the AI companies to the government.
I mean, he's a communist.
Well, but I mean,
people talk about
like what do you, what?
I mean, listen, this is
just silly, right?
This will be next week's a thing, because I was talking to a friend of mine today who's a longtime New York liberal. He said, "I've only become conservative now that these idiots hate Israel, meaning the Democratic Party,
yep,
and they want to confiscate all my wealth."
It's very clear.
It's not like
they're not hiding.
It's not like give a little.
They're not hiding either one, by the way.
It's not like give a little. It's like we want it all.
Anything to defeat Trump, right, is good.
Yeah,
they'll accept anything.
You'll embrace that freak from Maine or
planter,
or how about this guy Tallarico who bleeds soy milk? I mean, it's just a
whatever.
Kid. He's just like a freak of nature.
Whatever.
We don't have to get into that.
We don't.
We should at some point,
though. One other stock we want to talk about. Okay. How much time do we have?
We got a few minutes. I mean, but I'll always indulge the S3 data.
Okay. Very good. Thank you. Virgin Galactic, SPC. You want to pull that up?
What is that?
So
Space thing?
this is a suborbital space tourism operator, right?
Is this run by what's his name? Branson?
Yeah.
Oh God.
Right.
So you go up in space as
well,
for fun?
look at what's happened to the stock price in the wake of SpaceX. Look what happened to green on the far right.
Oh my God.
It just spiked like crazy, right? And then you see short interest was really high in this company, and then it just got obliterated. So if you want to know how powerful SpaceX is, it can take a company like this where the short interest is very, very, very high and make that black line, which is short interest. You can see it's just falling like crazy.
Or for now.
For now. One other thing we should talk about is the Kospi,
Okay.
which is the South Korean index. Short interest has gone up quite a bit, but this is a real proxy for the AI trade and the semiconductors. And
Really?
yeah. And one of the things that is a fascinating part of what's going on in today's market is that, stocks that are getting government subsidies. So I don't know if you looked at IonQ and some of these quantum companies.
I've heard of them.
Right. Right. But the Trump administration they picked some winners and losers.
Oh yeah,
right?
yeah, they've been doing.
And they said, "Hey, we're going to give you some money." IonQ wasn't part of that, but they gave money to IBM and so on and so forth. They're up on the screen here. The market likes the government intervention. That's why I asked about Bernie, because if
they like certain government, like the market liked
Intel. But look what's going on with Intel.
The market liked the 2008 bailouts, right?
Sure.
Because they've been saved. The
bankers hated it, but still, like
they hated the rules. They didn't mind getting the money.
Well, fair. But it's fascinating to me that you've got this red hot market in the face of what's going on in Iran, which it seems like it's
who knows.
It seems like there's.
I keep thinking every other day there's going to be a big bombing because but then he keeps kicking the can down the road.
Eventually you got to make a decision, right?
Oh, trust me. I don't know about you, Bob. By the way, before we end, are you done with
this?
I
think we've made our point this week.
Okay. So by the way, can we put that chart back on, that COPSI chart? I just want to make one point. If you're looking to debate the future of AI, I think that chart says it in one of the better ways. You got rising short interest and the long interest, and the index return going literally in the same
living
direction.
Lockstep.
Yeah,
that's exactly right.
So that is a battleground chart if I've ever seen it.
That's why we put it up.
Yeah,
it tells you like there's extreme negativity, but extreme exuberance at the same time.
I know, it's crazy. I don't know where I am. Usually it kind of comes in the middle. We should point out that during right before the financial crisis, there was extreme negativity. Goldman went short. Stan Druckenmiller was short.
Yep.
All the guys from the Big Short were short. At the same time, you had a lot of people buying shit. And, that Dow hit a record right before the financial crisis of 13,999, I believe it was, November 2007.
Exactly. So
there's a battleground.
There you go.
What was I just saying?
We were talking about Iran.
Oh, Iran. Yeah. Sorry. Which is a battleground of its own. I'm of the opinion, Bob, and maybe you are too, it's time to do it or don't, or get out. We kind of made just this playing of the game, it's like dragging this thing on. It's giving the Iranians additional oxygen to feel like they can jerk our chain. And I'm just wondering if we, listen, here's the problem. You don't want to give them a put on the Strait of Hormuz. Like they can come and demand money whenever, right? That's a put, right? As they say, the Fed put and all that. At the same time, we don't want to be there forever. Maybe what the thing is we should do is just turn them back to prehistoric times and go home.
Is it enough?
Yeah, but turn them back. Make sure they get maximum pain.
I mean, we just did 6 weeks of really targeted strikes, and the problem is, how do you not disrupt society? Like, you basically have to shut off the electricity, shut off the water. You're causing mass suffering to get rid of these guys. Make the case.
Or don't.
Or don't.
Or go home. I don't know. I mean, and then can we live with them having a put? Like, Like them having like they could say, if you don't pay us, we might throw a drone at you.
No.
Well, then you got to finish them.
You got to finish it.
You know, it's not nice, but it is what it is. They are an evil regime. I don't care what anybody says. There's nothing nice about them. There's no redeeming qualities of these pieces of shit.
If you're watching, you know, there's certainly a lot of activity. You know, law enforcement's been very, very, very busy.
Oh yeah,
breaking up a lot of plots that are here in New York City.
Yeah, our friend Jay Clayton's probably in the middle of some of that as U.S. Attorney for the Southern District. By the way, he had a great case today against Trendot Diagua. You know, he is, in my view, I mean, if there's like a Mount Rushmore of the Trump administration, he's right there. Him,
No doubt.
Besant.
No doubt.
I mean, they're right there. Rubio, obviously. I mean, he's doing such a good job.
It's amazing what he's doing.
Yeah, but they all the top people there. You know, when you kind of get down into I just found it interesting that Bill Pulte was now the national intelligence chief.
Let's save that for next week.
Yes, we won't go there. I like Bill. You know, he's a really nice guy, but national intelligence, I don't know. But anyway, maybe you know, I'm what am I? I'm just a simple country reporter. I think we're going to leave it there, Bob. We hit our mark. It's about an hour. Great show today.
That was a good one.
Yeah. Thanks for doing it in the studio again at S3. We're at the global headquarters of S3 Partners here in Midtown Manhattan. For Bob Sloan, I'm Charlie Gasparino. Thank you for tuning in to another riveting edition of Risk and Return. See you next week.